Okay, so this is another example I thought I'll add in, which is a very useful example. So there are times when the news is released, the price doesn't go in one direction. Sometimes it can go in one direction and reverse direction. And if you are not skillful to move your stop losses or to cancel the other trade when one trade is triggered, it may result in a double stop loss. So this example that happened on 17th of January is one of those that um, whipsaw. In other words, the price went up in one direction and then suddenly went down just as fast. Okay, and I like you to see how I managed this trade by quickly canceling one order when one order was triggered. So in other words, the long order was triggered, so I quickly canceled my short order, and I quickly moved my stop loss of my long order up to protect my unrealized profits. And what happened at the end of the day was I ended up with a 0R win. So in other words, I broke even, but if I did not act the way I acted, it could have resulted in a double stop loss. So do watch this trade on dollar Canadian. Okay, so ready to trade the news on dollar Canadian. Let me just take a look at where is Forex Factory. There we go. So it's 11 p.m. We have got major rate news, overnight rate statement. Basically, it's about interest rates. So this tends to move the market pretty significantly if the results come out different from expectation. Okay, so I'm trading the dollar Canadian pair. And I'm waiting to enter right before the news, which is about 11 p.m. So I'll place my order at about 10:57, 3 minutes before the market opens. So I'm gonna wait for the market price to decide my buy and my sell stop entries. Okay. So I've got about 4 more minutes. I'm gonna chill. So let's see what happens. Okay, it's actually 10:57. The market price is 24.10. So I'm going to place the buy stop order at 24.22, which is 12 pips above the market price, and the sell stop order at 2410 minus 12 at 2398. Okay. Hold on, the market price has changed to 2410, 2412. So let me just adjust that up to 2424. And 2412 minus 12 is 2400. Okay, so let's go. I'm going to create a new order. So volume 3.13. First buy stop at 1.2424. Stop loss at 1.2412. There we go. Okay. And the sell stop at 1.2400. Stop loss at 1.2412. Okay. Let me double check. 2412, 2424, 2400. Okay, great. So my orders are there. I'm going to now switch to my minute candles. And let me just mark out my entry about okay, so news is going to be released in 20 seconds. Let's see what happens. Okay, so it's short up. I'm going to cancel my sell Okay. Okay, so it's going up. I'm going to raise my stop loss to my entry to protect myself. Oh, I got stopped out. Okay, so let me do a debrief on the trade that just happened. As you can see, I've drawn these lines to mark out where we were. So this line over there, this was the stop loss for both the long and the short entries, right? So this line was the buy order, and this line was the sell order. Okay, so 3 minutes before the market opened, the market price was roughly 1.2412. Right, so I placed a buy stop order 12 pips above the stop loss, which was 1.2424. Okay, and my sell stop was placed 12 pips below the market price at 1.2400. Now I know the trade went really fast, so you may want to rewind and rewatch it again in slow motion, so you really understand what happened before watching this debrief. Okay, so the moment the news was released, it was really fast, as you could see. The price went up and triggered my buy order, and I ended up buying at 2424. So it was a really good buy, not much slippage, right? And initially, as you saw, it went all the way up to here, very nicely, right? And if you took a look at my profit box, okay, I'll show it to you again later on. But again, rewind and watch it. At one stage, I was sitting on about $2,500 of unrealized profit. Okay, and then what happened? All right. And by the way, the moment I saw that, you saw the buy order get triggered, notice I quickly cancel my sell order with the accompanying stop loss. Okay, so you always do it. The moment one order is triggered, in this case the long order was triggered, you cancel the short order immediately. All right, in case it whipsaws, after it goes up, it comes down, it triggers both orders, which it did actually. But again, luckily, well, it's not luck, it's skill, right? What happened was I quickly canceled my sell order. So I was up a potential 2,500 profits. You have actually seen that in the box on the bottom right. Go watch it again. And then the price started coming down. All right. So what did I do immediately? Notice that as the price went up and I had all these potential profits, I quickly raised my stop loss. Right. I kind of like drag. Right. With MT4, you can drag the stop loss. You see me drag that red line. I dragged it up. So I dragged my stop loss from 2412 to the entry price, which was basically 2424. Okay, so I dragged my stop loss to 2424, which is where I bought it in the first place. So in other words, I dragged my stop loss to the entry price. In case it came down, it would stop me out at break even, which it did. Okay, so what happened was it went up there, had all these nice profits, and then with the next second, it came down, as you saw, and it hit my stop loss at 2424, right? So essentially, I had a break-even trade, okay? And you can't get emotional. You can say, you know what? I was up $2,500, in a second, and it was all gone, right? So you can't get emotional. That's trading, right? So it's okay because this trade I break even. The next trade I'll make 2,005. The next trade I'll make 5,000, right? The next trade, whatever it is, right? So you got to think statistically over a large number of trades. Breaking even is not too bad. So what happened was, and you saw that the moment it hit the my stop loss and it broke even, it continued going down, right? It went down, as you can see this long shadow over here, and it actually was going to trigger the sell order. So it was a good thing I canceled the sell order, because if I didn't cancel the sell order, it would have triggered the sell order, right? And I would now be short. And then it went up again, and you would have hit the stop loss. So if I did not cancel the sell order, and I didn't move my stop loss, this would have resulted in a double stop loss, right? You could lose on both sides. That's why it's really important the moment one order is triggered, the long is triggered, you cancel the short order, okay? and you start to move your stop loss to the entry price for the order that was triggered. So that was essentially what happened, guys, right? I had 2,500 in my hands in 1 second. It's gone, and that's trading. Gotta laugh about it, can't get emotional, and you move on with your life, right? And you know that if you keep trading this way, applying the skills over time, you will do very, very well. Okay.